You know, when you're looking at the stock market, it can sometimes feel like there's this whole secret language, charts, indicators.
Hmm.
You hear terms like MACD, RSI, and it's easy to feel a bit lost, like you need some kind of special decoder.
Yeah, that's definitely a common feeling. Some of those tools, they can seem pretty complex when you first look at them.
But what if I told you there's an indicator that, well, cuts through a lot of that? Something really quite straightforward. Today, we're doing a deep dive into the SuperTrend indicator.
Ah, SuperTrend, yes.
And what's great is how surprisingly easy it is to get the main idea. You could almost explain it to a kid, maybe.
Huh, well, maybe. But yes, it is visually quite intuitive. And our goal today, really, is to unpack how this indicator, despite its simplicity, can actually give you some useful angles on market trends.
Right. Useful across different markets, too, like stocks, intraday.
Exactly. Stocks, intraday trading, swing trading, even futures and options. We want to see how it holds up.
Okay, so let's start with the basics. Imagine you've pulled up a stock chart and you add the SuperTrend indicator. What hits you first? What do you see?
So typically you'll see these two lines drawn right onto the price chart itself. They follow the price action. One's usually red.
Okay.
People often call that the sell line or the upper line.
Yeah.
And the other one's green, the buy line or lower line.
Red line, green line, got it. So visual guides, but how do they actually, signal something? How do they tell you maybe it's time to buy or sell?
Right. The real signal comes from the color changes, and often there's a little arrow that appears too. So when that red line flips over to green and you see a green arrow pop up,
Uh-huh.
that's basically suggesting, hey, an uptrend might be starting here. It's a potential buy signal.
Mm,
Under the surface, what's happening is the price is broken above a certain level, calculated using volatility.
interesting. So the color flip from red to green is like resistance potentially becoming support, hinting at upward movement. Okay. What about the other way around? Selling.
Exactly the opposite, really.
Mhm.
When the green line turns red and a red arrow appears, that's your signal for a potential downtrend starting.
Okay.
It suggests it might be time to think about selling or maybe taking profits if you were already long. Again, it's reacting to the price breaking below a calculated support level.
All right. So color changes, arrows, those are the main signals. But look, we know markets aren't always trending nicely up or down. What about when things just go sideways?
Mm.
Chop around.
Ah, yes. That is a really, really important point to understand. Super trend, like a lot of trend following indicators, it can struggle a bit when the market is just ranging, moving sideways.
Right.
In those conditions, the price can bounce up and down, maybe within a tight band, and that can cause the super trend to flick back and forth. Red, green, quite quickly.
Yeah, I can picture that.
And those quick flips, those signals that don't really lead anywhere profitable, that's what traders call whipsaws.
Whipsaws. Okay. Sounds painful for the trading account if you act on every single one.
It definitely can be.
Yeah. So does that mean we can't just jump every time the color changes? We need something more.
Precisely. Jumping on every signal, especially in those sideways conditions, isn't usually the best approach. To try and filter out some of those potentially false signals, many traders use what we call confirmation techniques.
Okay, confirmation. How does that work? How do we add that extra layer of confidence?
So let's take a buy signal. The line turns from red to green. You see the green arrow. A common confirmation method is to wait.
Wait for what?
You wait for the next candle to form, and crucially, to close above the high point of that first signal candle.
Ah, okay. So you're looking for proof that buyers are actually stepping in, pushing the price higher than that initial signal.
Exactly. It suggests there's some follow-through, some momentum building. It increases the probability, that the uptrend is real.
That makes sense. Looking for validation. And what about confirming a sell signal? Same idea.
Very similar idea, just flipped. So the line goes from green to red arrow appears. You then wait for the next candle to form and close below the low point of that signal candle.
Right. Confirming that sellers are actually pushing it down past that initial signal low.
Precisely. It helps confirm that selling pressure seems genuine and the downtrend might actually be taking hold.
Okay, so confirmation is key.
Mhm.
Now, what about managing risk? Every trade needs a plan B. How does SuperTrend help with setting stop losses?
Yeah, that's another area where it can be quite helpful, providing logical points. For a buy trade triggered by that red to green switch, a common place to put your stop loss is just below the low of that candle that gave you the signal.
Okay, below the signal candle's low, so if it immediately reverses and breaks that low, you're out with a limited loss.
That's the idea. Limit the downside. And for a sell trade triggered by the green to red switch, You typically place the stop loss just above the high of that signal candle.
Above the high. Got it. Protects you if the price suddenly snaps back up against your short position.
Exactly. It gives you a sort of rules-based approach to where your exit point is if the trade goes against you.
That's really useful. So for someone listening now thinking, okay, I want to see this on my charts, how do they actually add it? Is it complicated?
No, usually not at all.
Yeah.
Most trading platforms these days make it pretty easy. You'll typically find an indicators button or maybe a search box somewhere on the chart interface.
Right.
Just type in SuperTrend. You'll likely see it pop up. Sometimes you might see a couple of versions, maybe one built in by the platform, maybe some community versions people have coded. But the core calculation, the red and green lines, they should be fundamentally the same.
Okay. Search for super trends, simple enough. What about the settings? Does it come with default? And do people ever, tweak them?
Good question. Yes, it does have settings, typically two main ones, length and factor. The length often relates to the period used for calculating the average true range, or ATR, which is a measure of volatility.
ATR.
And the factor is basically a multiplier applied to that volatility measure. Now, defaults can vary a bit platform to platform, but you might often see something like length 10 and factor 3.
10 and 3. Are those the best?
Well, best is always tricky in trading, but one common suggestion you hear is to maybe change the length from the default, say 10 up to 14.
Change length to 14. Why? What does that do?
The idea is that using a slightly longer period, like 14, might smooth the indicator out a little. It could potentially lead to fewer signals, but perhaps slightly more reliable ones when they do occur. Though I should say the difference might not always be huge.
Just subtle tweak, potentially. Not a game changer necessarily, but maybe helps filter things a bit more.
Potentially, yes.
Yeah.
The factor setting, by the way, that controls how far the lines are from the price. A bigger factor pushes them further away, making it less sensitive. But tweaking the length is probably the more common adjustment people experiment with.
Got it. Length 14 is something to consider. Now, we touched on this earlier, but how versatile is SuperTrend? Can you slap it on, say, the Nifty index chart just as easily as on a stock like TCS or Wipro?
Oh, absolutely. That's one of its strengths, its versatility. You can apply it to indices like the Nifty or Bank Nifty. Individual stocks, you mentioned TCS, Wipro, sure. But also commodities, Forex pairs, pretty much anything with a price chart.
So it works across the board?
It can be applied across the board, yes.
Yeah.
For example, you might pull up a daily chart of a stock, apply SuperTrend, and see this long, persistent green line underneath the price for weeks or months.
Yeah.
That gives you a really clear visual signal of a strong, sustained uptrend. It could suggest, okay, maybe I should just hold on to this as long as that green line holds.
That visual simplicity for spotting a longer trend, I can see how that would be appealing. But
And there's always a but in trading, isn't there?
ways.
We need to be careful, right? This isn't a crystal ball. No indicator is perfect.
Yeah.
Absolutely critical point. Cannot stress this enough. SuperTrend, just like every other technical indicator out there, provides indications, probabilities, suggestions.
Not guarantees.
Not guarantees, not foolproof predictions, not absolute confirmations of what's going to happen next. It's a tool, one piece of information.
So definitely shouldn't be treated as some kind of standalone magic bullet solution.
Definitely not.
Yeah.
If you rely only on SuperTrend, especially in those choppy sideways markets we talked about, well, you're likely setting yourself up for those frustrating whipsaws and maybe taking a lot of small, unnecessary losses from stockouts.
Right. Use it as part of a bigger picture.
Exactly.
Right.
Part of a broader trading plan or strategy that might include other forms of analysis, risk management rules, market context.
Okay, so let's quickly recap the key things. SuperTrend.
Yeah.
It's visually pretty simple, uses those red and green lines plus arrows to signal potential trend shifts. Seems like a good starting point for grasping trends.
Yeah, I think that's fair. Its simplicity is definitely a plus, especially if you're newer to technical analysis. It gives you that immediate visual read.
And we talked about confirmation waiting for that next candle to close above the high for a buy or below the low for a sell to hopefully filter out some noise.
Very important, yes. That confirmation step adds a layer of prudence.
We also made it clear it's not the best tool for sideways markets. That's where you can get whipsawed. Understanding that limitation is key.
Crucial. Knowing when a tool is likely to be less effective is just as important as knowing when it might shine.
And finally, it offers straightforward levels based on the signal candle for potentially setting your stop-loss orders. Helps with the risk management side.
Yep, gives you a defined reference point.
So for you listening,
And that actually leads to a final thought, something for you to mull over. Given that SuperTrend, particularly in trending markets, can generate signals relatively often compared to some other methods, how does that fit with your personal style,
Hmm.
your risk tolerance? Are you someone comfortable acting on more frequent signals, accepting that some will inevitably be false? Or do you prefer a more conservative game, perhaps waiting for stronger confluence from other factors, even if it means missing the very start of a move?
Right. It's about aligning the tool's characteristics with your own trading personality.
Exactly. Thinking about that trade-off between frequency and potentially conviction is key when you decide how, or even if, you want to incorporate an indicator like SuperTrend into your own decision-making process.